Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about INGERSOLL RAND INC quarterly report. INGERSOLL RAND Inc. offers a diverse range of businesses and services across various industries. The company's key offerings include air and gas compression products, fluid transfer equipment and loading systems, power tools and lifting equipment, aftermarket parts, consumables and services, air treatment equipment, and controls, precision pumps for medical, laboratory and industrial applications, gas boosters and hydrogen compression systems, automated liquid handling systems, and odor injection systems, controls, software, and other related components and accessories. These products cater to various markets, including medical, laboratory, life sciences, industrial manufacturing, water and wastewater, chemical processing, energy, food and beverage, agriculture, and more. The company sells its products through a network of direct sales representatives and independent distributors. INGERSOLL RAND Inc.'s stock price has dropped by over 19% in the past year, primarily due to two key news events related to its earnings guidance. The first event was the Q3 2025 earnings report, where despite meeting Wall Street's expectations, the company lowered its full-year outlook for adjusted earnings per share due to tariffs on raw materials and delayed pricing realization. This led to a significant drop in share price, with over 2% decline in after-hours trading. The second event was the Cone 2025 earnings report, where the company trimmed its fiscal year 2025 earnings forecast, citing weaker net income despite increased revenues. These events have contributed to ongoing concerns among investors regarding the company's profitability and sustainability of organic growth, leading to cautious market sentiment and a decline in stock price. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by acquisitions, which contributed $1.4 billion in revenue, and higher pricing, which added $106.3 million to revenue. Additionally, favorable impact of foreign currencies and original equipment sales also contributed to revenue growth. On the other hand, revenue decline was mainly due to lower organic volumes, which resulted in a decline of $73.7 million, and unfavorable cost productivity and product mix, which led to a decline of $51.1 million. Net income and profit margins. A tale of two periods. The financial summary reveals a mixed bag when it comes to net income and profit margins. In the 3-month period, net income increased by $22.4 million, or 10.2%, to $245.8 million. However, this trend reversed in the 9-month period, where net income decreased by $294.1 million, or 48.2%. Profit margins also showed contrasting results. Gross profit margin declined by -0.1% to 43.7% in the 3-month period, but increased by +0.9% to 44% in the 9-month period. Operating income margin saw a slight increase of +0.1% to 19.3% in the 3-month period, only to decline by -3.7% to 13.6% in the 9-month period. The reasons behind these changes are attributed to acquisitions and restructuring charges that impacted net income. Unfortunately, no specific information is provided on the factors affecting profit margins. The company's financial performance indicates a consistent generation of positive operating cash flow. The net cash provided by operating activities has been steadily increasing, with $870.5 million in 2024 and $856.7 million in 2025. This trend suggests that the company is efficiently managing its operations to produce a significant amount of cash from its core business activities. The company's debt level has seen a substantial increase over the past year. Long-term debt rose by $32.7 million, while total debt increased by an additional $274.6 million from December 31, 2024 to September 30, 2025. This significant surge in debt is accompanied by a notable rise in interest expenses. The company's interest expenses have grown by $37.6 million over the 9-month period, and by $60.5 million for the year 2025 compared to 2024. The company's financial performance varied across different segments and regions. The Precision and Science Technology segment stood out as a top performer, with significant increases in orders, revenues, and adjusted earnings before interest, taxes, depreciation, and amortization, EBITDA. This segment saw an 11.1% rise in orders, a 5.3% increase in revenues, and an 8% boost in adjusted EBITDA. The Industrial Technologies and Services segment also reported a respectable performance, with a 5% increase in revenues. In contrast, the overall segment experienced a decline of 2.6% in adjusted EBITDA, indicating a less-than-stellar performance across various regions. Management is expressing a cautious outlook due to various risks, including global economic instability and competition. They are evaluating new technologies and restructuring plans to provide a comprehensive solution and drive growth through acquisitions in new geographies. The company expects sufficient liquidity to fund current obligations and working capital requirements for the next 12 months, with opportunities for share repurchases. Acquisitions and divestitures overview. The company has made several significant transactions in the past year. On the acquisition front, the company has invested heavily in various business ventures, with notable mentions including a $6.2 million deferred consideration for a transaction expected to be completed by 2025, and a $22.6 million contingent consideration for a deal set to close in 2024. In addition to these investments, the company has also incurred acquisition-related expenses totaling an unspecified amount on page 37 of the financial summary. On the divestiture side, the company has sold 3 wholly owned subsidiaries that held asbestos liabilities and certain assets to an unrelated third-party buyer. This move is likely aimed at streamlining operations and reducing liabilities. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant amounts in dividends, with $24.2 million distributed in 2024 and $24 million in 2025. Additionally, the company has also been actively buying back shares, with a total of $198.2 million spent on repurchases in 2024 and $703.3 million in 2025. That concludes the financial summary for INGERSOLL RAND INC. Feel free to comment below, and I will be happy to answer them when possible.